Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It is July 8th. This will be our chart lesson for today, and this is going to wrap it up for the week. No chart lessons on Friday, so hard to believe that a week's already gone past. I wanted to show you quickly the daily chart. I don't want to spend a whole lot of time with this because we got quite a few trades to go over today. For once, we had some movement here, but I did want to just show you if we're going to get a measured move, we didn't quite get there. Notice we're just kind of chopping sideways here. We did have a pretty good sell-off that bounced right off the midline there. This purple, this kind of purple lavender, whatever color it is, that's the midline for these bands. And this is our envelope system. If you're, I'll always get 100 questions. What is that? That's our proprietary envelope system. So if you're interested in it, you can go to the website and read up on it. But anyway, we bounced off that. We didn't quite have a measured move, but we got a little breathing room back to that upper band that we've been mostly turning down when we get around that lavender band up here. You can see most we usually back off of that. Doesn't hasn't really ended the trend. We've had some bigger corrections off of it, but sometimes they're just minor corrections and it pushes on back up again. Here we got above it and stayed above it for a while, but this is when we were really back in March and April when the things were really rallying. So, but anyway, we've got this one leg up. If we're going to get a measured leg, we got a little more room to the top. So we could push higher or we could continue to correct here. Wouldn't surprise me if we don't push on up here for a measured move. We'll just have to see, but I wanted to show you that real quick. Let's flip back over to the other chart. Okay, here's our 2000 tick intraday chart. And we had this huge sell-off during the overnight, and then we just went sideways here. Sometimes you'll get another leg down. This generally will give you a downward bias because we traded down into it. However, there was a large gap on the chart. You can see the yellow line is where we opened on the daily chart today. You won't see this gap on this chart, so if you start scratching your head and say, I don't see a gap, that's because there's not one, because this is a 24-hour chart. But if you go to a daily chart where it doesn't show 24-hour data, there'll be a gap from where we closed. This was the low of where we closed yesterday, and this is where we opened today. So if there's no overnight trading in there, which is all this in the gray, then we close here and open here, and there's a gap right there. So that line is that gap, and you can see when we recovered, we went straight to that, filled that, and then turned down from there. And that's exactly what you would expect to happen. Generally, they'll fill those gaps really quickly, so there was no surprise when we bounced out of there, and even no surprise when we turned back down from there. So that's what this rally was. The price is trying to fill that gap. Charts don't like gaps on them, and they'll fill them relatively quickly. Most of the time on the same day. Sometimes it goes. Sometimes if the market's really strong and this trend was to continue down, it might be a few days to a few weeks or even a few months before prices come back to fill a gap. But generally, they're going to fill them quickly. There's an old rule of thumb that says within 3 minutes, and then it's 3 hours, then it's 3 days, then 3 weeks, then 3 months, and then 3 years. And I don't know if that's accurate, but I will say that most of the time on the intraday chart, if there's a gap that's set up from the daily, it'll fill that gap usually that same day, if not within a couple of days. So anyway, that's what we're looking at here. But we need to get moving here. We're already 3 or 4 minutes into this, and we got a lot of trades. As you can see, uh, once we've started going higher, if you got a good setup here to go higher, you probably want to take it. Unfortunately, like a lot of these rallies, you don't get a real good opportunity setup to get in it. We got one setup here that I semi-liked, and we'll talk about it when we get to it. But let's back out a little bit, talk about each of the trades, and I'm going to move through them quickly because there's a bunch of them today. We're used to having only a handful of trades lately, but it seems like the volatility is coming back. We're getting a little movement, which is what you would expect after the 4th of July. It'll probably continue to pick up as we go into um, the fall, as the summer continues to end and people come back off vacation and traveling with their families and things like that. And a lot of traders take off in the summer and go on vacations and things like that. And even the New York markets, the big bankers tend to do that too. So the bankers and the institutional traders and things like that. So not uncommon. Just remember that with all the craziness going on in the country right now, though, that we could get volatility tomorrow that was like before. But my guess is it's probably going to slowly pick up as we go into the fall. But anyway, 8 o'clock came just as we're moving back down here. And you can see we were really in a downtrend here, but we had a close outside and a leg down, and we started another leg down here. And so we already had a break and 2 legs down, and notice that double bottom, and we bounced right there at it. It's a little risky going long without a break of that trend channel yet. It could be this channel's a little bit flatter like so. That's the way I originally had it, and it looks like we got maybe had an overshoot right there and then a move to a new low, but that's still a real long move. But I just went ahead and adjusted it because we were in that channel so tightly for so long that I couldn't argue that this may not be right. So it's a little risky going long there without that break and new low, although on the big picture, we got a triple bottom here now. There's a little bit of time. There's only a couple of hours in there, so it's not that long from that double bottom. And then we bounce there again, that far from the EMA. We're probably going to the EMA. This is a chance to catch a major low on that breakout. Those often, you hear me say this all the time, those often become important lows, and you usually get runners off of them. It's risky picking bottoms though. So, I mean, you could easily go long right there and it break higher and come down and stop you out and then go up. So it's always a risky move, but those are trades that occasionally with that triple test there and already having a break of your main channel and 2 legs down, being that far from the EMA, it might be worth risking it. Generally, you want to wait on a higher low, but a lot of times you won't get one. When they break lower like that, notice that we made a whole new low. A lot of times you won't get a higher low. And you see right here, we did it. Just rockets right out of there. That's what rejection looks like. We traded down into here, and suddenly it starts coming back. And before that bar closed, we're almost back. And we are back inside the range. And then that thing rockets out of there. That's true rejection. That's what rejection looks like. And that's what you really want to see to trade one of these. Of course, you don't know it's rejection until it's too late almost. So, but this is starting that reversal bar. It takes a lot of buying to be trading all the way down here and then suddenly reverse and close way up here. That takes some buying. So it shows you already there's some buying coming in. And it rockets up, and then you get a first entry short, and then you get a second entry short. That's a little large to call that a failure, but the odds are we're probably going to the high. So if it breaks higher here, I'm treating that like a failure, and I'm going to take that trade 9 times out of 10. And that was a quick, easy scalp. You probably didn't get a runner, but it was a quick, easy scalp. And then we come back, and you would expect prices to, we didn't quite get to the high, but you would expect prices to turn back down here, but they just kind of bounce around. I don't see anything here I like. We finally do go higher, and we actually break out the top side and fail. And notice what happens. You get a first entry, and then you push through. You actually push through the EMA right away. So there's a clue that, hey, we're probably going to get back inside the range and reversed. And you get a first entry, and then it pushes on down below the EMA, and then you get a second entry, and it fails quickly, and you get this big bearish bar. I like going short there on a failure. That was a quick, easy scalp. Unfortunately, you don't get any runners. It comes back real quick. But I like that trade, and it does, that failure right there does confirm the trend line as well, that short-term trend line. They still tried to make a retest of this high though, and then it turns down again. We're right back at the highs here. And so you may take that trade. I like it. It's a little aggressive. Again, you might want on a lower high, and of course we don't get one. You run down here and you bounce again right at the lows. And that's a pretty good bar, but again, that channel is really, really strong, and there's no way of saying, hey, we might have had a close outside on this one yet. So I think it's just a little, and that doesn't look like rejection. You're just kind of going sideways there. And even if you try to trade that, it gaps above and moves up, and it doesn't ever come back. So what you'd really want to do is wait on the higher low, which comes here. I marked this one. I still like it, but it's a little bit congestive. These are just, I mean, you can see we're having trouble going higher right there. That's not what rejection looks like. Rejection looks like this over here. But you might take that because we're overdue to come back to the EMA. And then finally you get a reversal. Normally I'd want to see this on the other side of the EMA, but being that far from the EMA, I guarantee you on that second entry right there, when it reverses, they're going to trap the shorts and it takes off. It does back up one more time, but you don't get stopped out. And you could enter again here when on this engulfing bar. It breaks lower first and turns up. If you've got room to get out still before the EMA, you may take that trade. I don't think I would wait and go long right here. I'd want to be in here. But you could take this if you entered one tick above the red bar right there on when this engulfs it and goes out the other side. So of course it runs straight up, and you don't want to be entering long up here. This one's tempting. It's 3 tries to go lower, but we're just coming off the high of this range. I'd want a second entry here, and you don't get it. Of course, you break out, and we don't really have any consistent place to turn down, so I think that's too risky. You'd want a lower high, which doesn't come to way over here, and then that doesn't look like rejection. But when it comes back again and you get the failure, now you got a trap. Quick, easy move. People will probably say, well, there's lows right there, but you're expecting prices to go lower here. I mean, this is known resistance here, and it doesn't really look like a little range until here. Of course, you could say there's some bars, but with this being a trap off of this strong resistance, I like going short there on the failure. Like I said, generally you'll want this to be under the EMA, but on a range day, the EMA is not quite as important. You're going to push back and forth through it a few times. You could maybe argue for this to be green, but the fact that it was a trap, I like it. Once it proves it's not going much further, just stay. I wouldn't enter again, and you just don't get another chance, and you're all the way back to the bottom again. Again, this doesn't really look like rejection, but this is a higher low. And look how many times, I mean, we've bounced consistently down here every single time. There's strong buying down there. I wouldn't be afraid to maybe even take that trade. But again, you got a strong move down that hasn't closed outside that channel yet. So you might argue for that one to be green, like I've talked about the others. You're better off to wait on that higher low. The only reason I marked this one green is because that's not rejection. Look how prices are just going sideways. But we finally shoot out of there, pull back, and we bounce again and get a nice signal bar. I like going long there. You got plenty of room back to the EMA, and this is probably one of the trades of the day. It just rockets straight up. And you know where to exit. Exit right in here below. Get out a tick or two ahead of that. And that's the easiest trade of the day, most likely. And I mean, you easily get 12 points right there if that's the only trade you took, if you're holding runners. And of course, then you make a high right there, you test it again, first entry, and you get a second entry long right here. It fails. I like going short. That was a quick, easy scalp, but it came right back. By the time this one forms, you got sideways stuff there. I don't think I would enter again, although because this is truly a first entry, second entry, because that does look like a leg down. It's close. You could have looked at this as a double top and maybe said this is the failed second entry long, but it's a little bit congestive there. I'm just a little worried about that one. When this sold off so hard and it came back so quickly, that scared me away from entering again, or I would have liked to enter right there myself. And then we're coming back, and then you get a first entry, second entry right off the key entry point. We haven't reached the lows yet. Again, it's a quick, easy scalp, but it bounces. And so prices were not, you can tell now the buying, people have started to gain, they've started to get confident that we're probably going higher here. And so it comes back up. And the only reason I like this one is, again, you've got a first entry long and then a second entry, and you're expecting prices to come back down here. And you can see that traps a lot of people, but it serves two purposes. It not only traps the longs out, it traps a bunch of shorts in, and then when they reverse it, the shorts have to exit. And that gives it the momentum to finally get through there, and then we're working higher. And with the fact that we didn't get back, the buying starting to come in down here, the the really smart traders are coming in early, and then the chasers start coming in when it goes up through here. Don't buy into this resistance here. Let it get above and act as support first. It does, but you don't get a setup. So you have to actually wait until you get a first entry, second entry. Now, I don't know. I wasn't watching when this set up, so I don't know if this broke higher or lower first. So the second entry really triggered here. Okay, I'm sorry I had an interruption. We were talking about this trade. I don't know which way it broke first. If this actually broke forward and came back, if you entered on this bar and put your stop on there, you would have got stopped out. So the fact that this was an engulfing bar, you should technically put your safety stop down here until this bar closes anyway. So so it doesn't matter how you traded it. If you follow the rules the way we teach you to do it, you wouldn't have got stopped out of this trade. It would have been a good trade. But obviously, if you put your buy stop one tick above that and it breaks higher first and turns down, well, the problem is you don't know if it's going to be an engulfing bar. Well, actually, you would if it breaks higher first and then comes down. But if it breaks lower and then turns up, it's going to be an engulfing bar anyway, and you could actually go long one tick above that, and you know you have to put your safety stop. So you should be able to take this trade no matter how you played it. So I hope that makes sense. Let me explain that one more time. If it broke higher first and you went long and then it turns down, that's if you had your stop right there, you're going to get stopped out all in one bar. But my suggestion is always to put your stop, and this is not much further, so you're not taking a lot more risk, is that if it's, you could just go ahead and take the stop out, basically, if it broke higher first. If it broke lower first, it doesn't matter because it's still in the, you know, you're not going to go long anyway yet until it breaks higher, and then it's an engulfing bar, and you play the engulfing rule. But if it breaks higher first and you're already in this, and then it turns down, well, it could just keep going and you might just take a bigger stop. So, but the way I recommend to play it, if it's an engulfing bar, is go to the previous swing low, or if it's on the other side of swing high, if you're trying to go short, and put your stop there, because engulfing bars will mess you up and you'll get stopped out a lot of times on good trades. So it depends on how you played that. If it broke lower, you could even wait to go long one tick above this. I don't think I would do that. I think I would only play it right here. Or if I did play it here, I'd let it break higher and maybe drop it right at the high, or maybe a tick back and see if you could get filled. I don't know if you could have or not, honestly. So, of course, it runs on up. You get a failed second entry. You could look at this as a double bottom and treat this as a failed second entry, but after we just came off the high, I don't think you can risk that. You do get a second entry long at the EMA, and you can see the EMA is held a few times here. And so you may risk that one. I think it's risky. That looks too congestive. I think it's risky, so I'd probably skip it. But if you want to be aggressive, there it is, and it does work. And then, of course, we're bouncing back here. There's actually a second entry long, right? I don't think I would take that trade. This doesn't look like a leg back. This is congestion, so that looks like a breakout, a failed breakout. You might trade as a failed breakout and a triple test, and you could have scalped out, but I would wait on the second entry, which comes here, and then that signal bar ain't gonna work, and this looks too sideways. We do end up with a little trap here, but again, this is your signal bar. You can't use this green one here, so I just don't see unless you entered right here, I don't see any way to take this trade. You might have entered there, but I wouldn't even count that as a second entry because that's just sideways and it looks like a drop down. But you could look at this as a triple test, and you can see that there. And it is right at the key entry point. The EMA is right there. The support, they end up trapping everybody out. And that's what they do when they start struggling to take it higher, they'll let it go lower and trap everybody in and out. They'll trap all the shorts in and the longs out. And I guarantee you there's no telling how many shorts loaded up right here thinking they were outsmarting everybody. and then they reverse it and they just run all your stops. And then all the longs that got out have to start chasing it. All the shorts that got in, their stops get run, and it causes this thing to rocket up. That's what they do. So be careful of that. Don't ever enter on the breakouts to the. If you try to pick these tops, that's what's going to happen to you most of the time. That's just all I'll say about it. But you might have entered there. You'd have enough room to scalp out. That's all you'd have got. Runs on up. You don't want to be entering long up here, and I don't see any chance for a short. There is a second entry short right here. I don't think you want to go short yet. Wait on a lower high. By the time you get one right here, you could have taken that. I don't. Well, actually, I don't know if you'd probably got stopped out of that. I mean, just look how congested that is. There's no rejection here, and then you get a triple test, and again, there's just no rejection there, and so it's risky. I don't think you want to enter up here. If you did, you probably lost right there. I don't know if there's 4 ticks in there or not. Actually, you need probably 6 ticks to be able to trade. I'm just curious if there's what you got there. No, you only got 3 ticks there, so you would have got stopped out of that one trying to pick a top again. So I mean, you can clearly see at the highs. There's no consistency here. That was to fill the gap, and you can see once that was completed, they tried to take it higher a few times. It failed, but I don't see any way to trade that and safely. You do have a first entry there and a second entry long there, but you're way down here at the lows, on the low side of this thing, and you don't really, at that time, it looked like the trend line was more over here, but it ends up being over here in the end. But look out, you're not back to the EMA, so that's a dangerous failed second entry long, but it gives you a second chance. It comes back, it breaks higher and fails and turns down and goes out the other side. I wouldn't hesitate to go short there, and look at how it takes off now. And so we're probably going to try to go the other side, and that's what prices are attempting to do. We run down, you get your first break, and you get a first break of the blue channel, and you get a first entry and then a second entry when it breaks lower there. The only reason I marked that one green is you got a little bit of sideways congestion there. That's a little something's, you should drop on down generally, and it doesn't. But you would still expect prices to test the low, so you may want to risk that one. And then you get another first entry, another second entry. I don't think I would take this second entry short, even though we do have a little channel with a break and a new high, because it's just kind of in no man's land. We're not back to the trend line. We're not below the EMA. There's too big a chance this thing bounces off the EMA and turns up, and it looks like that's what's going to happen, but it fails quickly and turns down. I like going short there because now you got a first entry and then you push through the EMA and you got a second entry, it fails, and it's just a free shot back to the low. And of course we bounce right off the low side of the channel. You get a first entry, second entry short, but this is, we're trending down and we may be going back to the low side of, we may just continue to trend. We may be going back to test the lows again. Definitely probably coming back to test this. I don't have it on there, but let's just see and you can see that's exactly where we went to because we didn't really get a good test previously. So you would expect prices to continue to push lower here, and maybe if they go through here, they're probably going to test this low again. But you finally get a break of the yellow channel, you get a first entry and then a second entry, and it's not quite back to the EMA, but it does come back. Notice it comes back and tests this support across here, and it acts as resistance on a failed second entry long. And plus you got the key entry point there. You got enough room to get out in case it bounces. And notice how it did bounce momentarily at the EMA before it shot on down. This would have been a pretty good trade. You may not have got a runner on that one. It just depends on how you entered it. What you might have done here, your safety stop has to go above the high, but you actually enter below where the failure happens, and that's when it broke lower below that bar right there. And so you might have let that break lower and dropped the limit order, and I know you could have done that. a little further back, and you would have got a little better entry for that drop zone down, and you would have got a runner if you did it that way. And of course, we bounce off the support there. You'd want to wait on a higher low here, and you don't ever get it, and this just thing rockets on up, and you don't get another chance to go long here either. So it gets us into 3 o'clock. So pretty good trading day, lots of movement here. It wasn't that hard to find an entry today. If you struggle with ranges, this was probably pretty hard. And here's the key. When the support or resistance of the range is consistent, it's pretty easy. It's fairly easy trading. These were all easy buys down here. When you don't get consistent turn spots like up here, how we're just chopping around, it got a little more consistent in the afternoon. So, but there's not a lot of good setups there either. So, but when it's not consistent, it's hard to trade it. So most of your better trades were off the lows. Then of course we had a nice trend up here, which you didn't get a lot of chance to enter. And then of course we were trending lower again, and we got a few more shorts here late in the afternoon. But most of your better trading was up until about 10 o'clock today. Pretty good trading day. I was excited to see some movement, even though we ranged a good bit really from from our 7 o'clock where I come in to 10. But there's still some good trades in there. This is not a really hard trade, especially off the lows. The only problem is you're down. You have a downward bias, so it makes it a little scary to buy those lows. But when you see them bouncing consistently and getting good rejection, just trade them. I mean, you can get in those generally with fairly low risk a lot of times. Now, when they have these huge bars, maybe not. But if you get a decent sized bar, they're worth trading. So anyway, I'm going to wrap it up. This is going to wrap up our week. We'll be back Monday to do it all over again. Hope you have a good weekend. Hope you had a great trading week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.